Let me ask you something honestly. How many times have you thought, everyone is making money in the stock market? Why am I always late, confused, or losing? You watch YouTube, you read Twitter threads, you see screenshots of profits. And yet, most people quietly lose money. Not sometimes, consistently. Here's a fact that shocks people. More than 90 to 95% of retail investors fail to beat the market long term. Not because they're stupid, not because investing is a scam, but because the stock market doesn't punish ignorance. It punishes human psychology. And today I want to show you why. Reason number one. The market is designed to exploit emotions. Most people think the stock market is about numbers. It's not. It's about fear and greed. According to multiple studies, including data from Dalbar, the average investor earns 3 to 4% per year, while the market itself averages 8 to 10%. Same market, same stocks. The difference? Emotion. People buy when they feel excited. They sell when they feel scared. Which means they do the exact opposite of what actually works. Reason number two. People buy when everyone is talking about it. Be honest. You didn't hear about that stock when it was boring. You heard about it when it was everywhere. Friends talking, news headlines screaming, charts already going up. By the time something reaches your WhatsApp group, the smart money has usually already exited. This is called recency bias. Our brain assumes what's happening now will continue forever. It won't. Markets move in cycles. Human emotions don't understand cycles. Reason number three. People want fast money, not real wealth. This one hurts, but it's true. Most people don't want to invest. They want to escape. Escape their job. Escape financial stress. Escape feeling behind. So they chase options, leverage, tips, shortcuts. But the stock market rewards patience, not urgency. Warren Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." Most people don't lose money slowly. They lose it quickly, trying to get rich faster. Reason number four. People don't have a system. They have hope. Ask most investors this simple question. What's your strategy? You'll hear things like, "I feel this company is strong. It looks like it will go up. Everyone is buying it." That's not a strategy. That's hope wearing confidence. Professional investors survive because they follow rules. When to enter, when to exit, how much to risk, when to do nothing. Most retail investors have none of this. They react, they guess, they panic, and panic is expensive. Reason number five. Losses hurt twice as much as gains feel. Good psychology proves this. Losing $1,000 hurts about twice as much as gaining $1,000 feels good. So when a stock goes down, people hold, hoping it comes back. When a stock goes up, people sell early, scared of losing profits. This behavior is called loss aversion, and it silently destroys portfolios. Reason number six. People confuse activity with intelligence. Doing more feels smart, checking charts every hour, watching every market update, buying and selling frequently. But data shows that the more people trade, the worse they perform. Overtrading increases. Fees, taxes, emotional mistakes. Sometimes the smartest move in the market is doing nothing. But doing nothing feels uncomfortable. The truth, nobody likes to hear. The stock market doesn't care about your effort, your stress, your intentions. It only rewards discipline, patience, emotional control. That's why intelligent people still fail. Because intelligence doesn't protect you from psychology. So, who actually wins? Not the smartest, not the fastest, not the loudest. The ones who invest consistently, think long-term, accept boredom, control emotions, respect risk. They don't chase excitement, they build systems. and systems beat emotions every single time. Final thought. If you've lost money before, you're not broken. You were just playing a psychological game without knowing the rules. The moment you stop trying to win fast and start trying to stay disciplined, everything changes. Because in the stock market, survival comes before success. And if this made you think, even a little, you're already ahead of most people. Let's learn, let's improve, and let's stop letting emotions decide our money.